Cryptocurrency. Sounds complicated, right? But it's actually simpler than you think. Imagine digital money, like a digital rupee, but not controlled by any bank or government. That's cryptocurrency. Bitcoin, Ethereum, these are some famous examples. Think of it like online gold, but digital. People buy and sell it, hoping its value will go up. It's like a digital asset you can trade. Cryptocurrency works on something called blockchain technology. Imagine a digital ledger recording every transaction, making it secure and transparent. It's like a public diary of all crypto activity. In simple words, cryptocurrency is decentralized digital money, offering a new way to invest and manage your finances. So, why are people going crazy over this digital money? Firstly, high potential returns. Cryptocurrencies can be volatile, their value fluctuating a lot. This volatility attracts traders hoping to make quick profits. It's like riding a roller coaster, but with potential financial rewards. Secondly, it's decentralized. No banks, no governments. You control your money. This appeals to people seeking financial freedom and independence from traditional systems. Thirdly, it's the future of finance. More and more businesses are accepting cryptocurrencies, indicating a shift towards a digital economy. Early adoption can be advantageous. However, remember, high rewards come with high risks. It's essential to understand the market before diving in. Ready to dip your toes into the crypto world? First things first, you'll need a crypto wallet. Think of it as your digital wallet to store, send, and receive cryptocurrencies. There are different types of wallets, some online, some offline. Choose one based on your security preferences and how much you're willing to invest. Next, you'll need to choose a cryptocurrency exchange. This is a platform where you can buy and sell cryptocurrencies. It's like a digital marketplace for crypto trading. There are many exchanges available, each with its own fees, features, and security measures. Do your research and select one that aligns with your trading needs. Section 4. Choosing your trading platform. Choosing the right trading platform is crucial for a smooth crypto trading experience. It's the foundation of your trading journey. Think of it as choosing your weapon for the crypto battlefield. Firstly, consider the fees. These can vary widely. Different platforms charge different fees for trading, depositing, and withdrawing cryptocurrencies. These fees can add up quickly. Look for competitive fees that won't eat into your profits. Every penny saved is a penny earned. Secondly, check the security features. This is non-negotiable. You're trusting this platform with your hard-earned money. Security should be top-notch. Ensure it has robust security measures like two-factor authentication to protect your investments. This adds an extra layer of protection. Thirdly, read reviews and research the platform's reputation. User experiences can be very telling. Look for platforms with positive user feedback and a proven track record of reliability. This can save you from future headaches. Lastly, consider the platform's ease of use. A user-friendly interface can make a big difference. Choose a platform with a user-friendly interface, especially if you're a beginner. It can make your trading experience much more enjoyable. A complicated platform can be overwhelming and lead to costly mistakes. Simplicity is key to avoiding errors. Section 5. Safety first. Protecting your investments. The crypto world can be risky, with scams and hacks always lurking. It's a digital Wild West out there, and you need to be prepared. It's crucial to take security measures to protect your hard-earned money. Think of it as building a fortress around your investments. Firstly, use strong, unique passwords for your crypto accounts. A strong password is your first line of defense. Don't use the same password for multiple accounts. Each account should have its own unique password to prevent a domino effect if one gets compromised. Treat your crypto passwords like you treat your online banking passwords. They are the keys to your digital vault. Secondly, enable two-factor authentication or 2FA on all your crypto accounts. This adds an extra layer of security. Requiring a unique code from your phone or email in addition to your password. It's like having a second lock on your door. Thirdly, be wary of phishing scams. These scams can look very convincing, but are designed to steal your information. Legitimate companies will never ask for your passwords or private keys. Always verify the source before sharing any information. Don't click on suspicious links or share your personal information with unverified sources. It's better to be safe than sorry. Lastly, keep your software and devices updated. Regular updates are essential for maintaining security. Updates often include security patches that protect you from the latest threats. Think of them as regular maintenance for your digital safety. Regularly updating your software is like installing a digital security system. Stay vigilant and keep your investments safe. Section 6. Do your homework researching cryptocurrencies. Before you start trading, it's crucial to understand what you're buying. Don't just jump into the hype train. Do your research and invest wisely. Firstly, understand the technology behind a cryptocurrency. What problem does it solve? What makes it unique? A strong technological foundation indicates a higher chance of long-term success. Secondly, research the team behind the project. Are they experienced? Do they have a good track record? A dedicated and transparent team is crucial for a cryptocurrency's growth. Thirdly, analyze the cryptocurrency's market cap, trading volume, and price history. This will give you an idea of its liquidity, volatility, and potential for growth. Remember, knowledge is power in the crypto world. The more you understand, the better equipped you'll be to make informed investment decisions. Section 7. Risks and rewards. Navigating the crypto market. Cryptocurrency trading can be a wild ride, full of unexpected twists and turns. While the potential for high rewards is enticing, it's crucial to acknowledge the risks involved. The allure of quick riches can sometimes overshadow the dangers. Firstly, the crypto market is highly volatile. Prices can change in the blink of an eye. Prices can fluctuate dramatically, leading to both significant gains and losses. This unpredictability can be both thrilling and nerve-wracking. It's essential to only invest what you can afford to lose. Never put in more than you can handle losing. Secondly, scams and hacks are prevalent in the crypto space. The digital nature of cryptocurrencies makes them a target for cybercriminals. Be cautious of fraudulent schemes and take necessary security measures to protect your investments. Use trusted platforms and enable two-factor authentication. Thirdly, regulations surrounding cryptocurrencies are still evolving. Governments around the world are still figuring out how to handle this new form of money. Changes in regulations can impact the market and your investments. New laws can be introduced that might affect your holdings. Stay informed about the latest developments. Regularly check news sources and updates from reliable crypto analysts. Remember, investing in cryptocurrencies is a marathon, not a sprint. It's about long-term growth and sustainability. Patience, research, and a long-term perspective are key to navigating the exciting yet unpredictable world of crypto trading. Take your time, do your homework, and stay the course.